All right, team, this is your host, Charles Becco, and today we'll be talking about the one sector you should be buying right now, and you guessed it, it's oil. All right, so let's take a look at everything. All right, so somewhere over the Gulf, there's a radar screen glowing in a dark room. A tanker captain is staring at the horizon, trying to figure out whether the light in the distance is a flare, a drone, or the start of another international headline. That is oil right now. That is Iran. That is the Strait of Hormuz. And that is the conflict with the United States. It's a mess out there. Okay? The price of oil is moving on every headline, every bullet, every missile that is fired over the Strait of Hormuz and in Iraq. And as long as that conflict is going out, our core thesis here at Brooklyn Traders is we should be long oil. Okay. We've seen several back and forth from the administration. Oh, we got a deal. We don't got a deal. And guys, as long as this conflict is going on, you want to be long oil. All right. And so that's pretty much it. Okay. We're not cheering for the war. We don't want chaos, but we know that as long as this as long as this conflict is going on, the world will be unstable, and oil is gonna be one of the first places the market is gonna look to dump its money. Okay. All right. So in terms of criteria, right? We want, a nice simple mix. Okay. We want companies with direct crude exposure, sensitivity to the Middle East market. We want enough liquidity to trade the asset, enough upside if crude catches a, geopolitical premium. And, we just want, companies with fundamental strength because oil moves fast, and so again, what's happening over there in the Strait of Hormuz is very headline sensitive, and so we want to be in and out in case that we have to. I've been flipping oil, going back and forth for the last couple of weeks, and it's been very healthy for our portfolio, right? And so let's go on to the first pick, and that is going to be BNO, the United States Brent Oil Fund. Okay, BNO is the cleanest ETF if our thesis is going to be based on the global crude oil market, right? And the risk that it is exposed to. Brent is, hey, this is the standard for, geopolitical oil pretty much. When traders are worried about the Middle East, tankers, Europe, Asia, sanctions, and global seaborne crude, they are usually thinking in terms of Brent, right? So this is the standard. Why do we like it? It's simple. If Hormuz stays in the headlines, BNO gives you a cleaner way to express that global risk without buying the futures directly. So that's what the risk is, right? Instead of, again, being exposed to futures, which is very volatile, you could get to roll the cost, reversals, and headline whipsaws by going either long or short BNO that trades exactly like a stock, has options. So, yeah, our first pick is going to be BNO as a clean proxy for Brent crude. All right, so that's BNO. Second pick on the list is UCO, which is ProShares Ultra Bloomberg Crude Oil. UCO is a very serious leverage crude ETF. If crude spikes, UCO can move very hard. If crude reverses, it can hurt you really fast, right? This is not a long-term investment. This is literally a tactical trading vehicle, and you have to treat it as such, okay? So if BNO is a clean oil play, think of UCO as like the flamethrower, okay? You don't bring it out unless you understand what's happening in the room. UCO is the high octane crude trade, okay? And so this is not for kiddos. This is for pros only, all right? So our next pick again is UCO. Moving next on the list is Gush. Gushy Gushy, right? All right. So, this is the daily S&P oil and gas 2 times bull again. Gush is a leverage ETF. Okay, so big boys toys only, right? That makes it a little different from UCO. UCO is crude. Gush is oil equities. Okay, pretty much crude runs on exploration, and Gush can move with violence, right? And so this is a risk on oil equity trade, okay? But the risk is real. If crude pulls back, if equities sell off, or if leverage decay starts to work against you, Gush can get ugly really fast. I typically don't like this for options. I'm looking at Gush more for just like, stocks, right? Let's actually take a look at the charts. I neglected to look at some of these, right? And so this is BNO right here, right? And so this is BNO, this 5-minute time frame. Okay, this is what BNO looks like. Again, kind of trapped in the channel. Again, very headline sensitive. So that's BNO. This is UCO, right? As you can see, very bullish. And Gush. Boom, right? Okay. Very good. All right, now back to our regularly scheduled program. So that's Gush. Next on the list, we're going to go to real companies now. Our first value stock pick, right, from an actual company is going to be Exxon Mobil. Yep, the same place you get your gas. All right. Now, first, Exxon is literally the best in class major oil company. Okay. You are buying scale, global reach, upstream production, refining, chemicals, cash flow, balance sheet durability. In plain English, Exxon is, hey, this is the top value player, right? I'm not too sure if Warren Buffett has this in his portfolio, but it's definitely a Buffett-like stock. Okay. If you want oil exposure but do not want that live inside leverage ETF Lamborghini trade, ExxonMobil is a really cool way to be exposed to the oil market. The risk is simple. If crude rolls over, Exxon can pull back too. But compared with the more tactical ETFs, this is more of a durable vehicle. I mean, you could even say, hey, if you want to, put a portion of oil in your long-term portfolio, this is where I would go first with XOM. Let's take a look at the charts. Yeah. Well, looks like we're breaking out of a channel here between 145 to 155. Looks like we got a squeeze forming. I think we have enough for price targets here. So 8, 9, let's just say 165 price target. 165 to 170. I'd say 165 to be conservative. Then we're going to be trapped in the closet up here. All right, so that's XOM. All right, next on the list is CVX, Chevron. Okay. Again, Chevron is one of those names where, hey guys, we've all been to Chevron, right? And so this is a very, very good company. It's got income. It gives you upside oil exposure. It's a very conservative pick. Chevron is a large scale, integrated franchise. Again, this is a cash cow. Again, not the fastest horse at the pony show, but, every horse doesn't need to be fast. Some horses just need to be stable, right? And so you do get the commodity exposure. But yeah, Chevron, again, a very top value pick here. And so that is Chevron. Okay. Let's take a look at the list at CVX. That's Chevron. Boom. All right. Again, if you can see the chart here, let's just even pull back 5 years weekly. Yeah. Okay, Chevron is one of those picks that's not really going anywhere. Again, this is a 5-year chart team, right? And then even during COVID, right, just rock solid, right? So if you're looking for a place to park money long term, just to park it and maybe just get a few points here and there, Chevron is like a bank. Looks like a bank to me. All right, so that is Chevron. Okay. And the last player on our list is going to be Occidental Petroleum. Okay. Oxy is a more of a higher beta stock pick. It's got more torque. It has major Permian basin exposure, more sensitivity to crude oil, more upside if oil catches a real, real geopolitical bid, if you want to say that. It's also to Warren Buffett, Berkshire Hathaway. Okay, but we don't need to kind of get into all that right now. The reason why Occidental matters is because if crude gets hot, Oxy can move really fast, and I would even say it's maybe even the Tesla of oil. Okay, and that's not even really proper to say, but just for you junkie option traders out there, you would kind of know what that means. Okay, high risk, high beta. Okay, it could hurt you or help you in both ways. If crude reverses, Oxy can underperform. It could under or overperform XOM and CVX. Okay, so Oxy has got a lot of torque. It's more aggressive, more sensitive, and so again, for you junkie options players out there, you would like Oxy. All right. And so just finally in closing here, all right? Guys, not everything needs to, last forever, right? So in closing, oil is just not another sector. Oil is a pressure gauge for geopolitical risk and uncertainty, which there is plenty of, okay? So, hey, if the Strait of Hormuz is calm, and everything is cool, these plays are not really going to go anywhere. But when Hormuz gets hot, crude can move really fast in either direction. All right. I heard and I saw that our president wants to suspend the gas tax for a while, right? And so to me, if you want to suspend the gas tax, right? And when does the government ever suspend anything, right? If they want to suspend the gas tax, that to me tells me that this thing should be lasting a lot longer than we expect. All right. Again, Charles, Brooklyn Traders. Don't trust the headline. Trust facts. Okay. As long as this war is going on, the oil trade is going to be popping. If the oil, I got myself all twisted up today. If the war actually stops, okay, then the oil trade will kind of fade away with it. All right? Take care, everybody. Stay frosty out there.